Ever wondered who really owns those little pieces of your investment pie? You're using Raiz, you're rounding up your purchases, you're seeing those micro-investments grow, but who is benefiting from that growth, beyond you? It's a question that often gets lost in the shuffle of user interfaces and sleek app designs. We focus on our own returns, which is understandable, but the underlying structure of ownership is crucial for understanding the company's direction and potential conflicts of interest. So, let's dive into the fascinating world of Raiz shareholders. Raiz, for those who might be new, is a micro-investing platform that allows users to automatically invest small amounts of money by rounding up their everyday purchases. It's designed to make investing accessible to everyone, and it's done a pretty good job of that. But being a publicly listed company, Raiz has a complex ownership structure, and understanding this is vital. To get to the heart of it, Raiz is listed on the Australian Securities Exchange, under the ticker RZI. This means anyone can, in theory, buy shares in the company. However, the largest shareholders typically hold the most influence. So, who are they? Historically, and currently, there are a few key players. One significant shareholder is often institutional investors. These are entities like fund managers, superannuation funds, and other financial institutions that invest large sums of money. They are looking for long-term growth and stability, and their presence indicates a level of confidence in Raiz's business model. Another important group of shareholders are the founders and early investors. These individuals took a risk on Raiz in its early stages and often retain a significant stake in the company. Their interests are closely aligned with the company's success, and they play a vital role in shaping its strategic direction. It's important to note that the shareholder landscape can change frequently. Share prices fluctuate, institutions buy and sell, and new investors enter the market. Therefore, the specific breakdown of major shareholders can shift over time. To get the most up-to-date information, you can always check the company's investor relations page or consult financial news sources that track ASX-listed companies. Why does this matter? Well, knowing who the major shareholders are can give you insights into potential influences on the company's decisions. For example, if a large institutional investor with a specific investment philosophy holds a significant stake, it could influence Raiz's approach to portfolio management or its expansion plans. Additionally, understanding the level of founder involvement can shed light on the company's commitment to its original mission. Founders who maintain a substantial stake are more likely to be invested in the long-term success of the company and its users. Furthermore, the presence of a diverse range of shareholders can indicate a healthy level of market confidence. A company that attracts a variety of investors is often seen as more stable and promising. While the exact proportions of ownership might vary, the key takeaway is that Raiz is a publicly listed company with a mix of institutional investors, founders, and retail shareholders. This structure allows for a broad range of perspectives and interests, which can contribute to the company's overall growth and stability. It also means, as a user, that you are part of a larger ecosystem of investors, all contributing to and benefiting from the platform's success. With that said, thanks for watching, and until next time.